All right, guys, welcome back to another episode of the SPY Weekly Analysis. If you guys like this content that we throw out every week, be sure to subscribe to our YouTube channel. Again, we do host live shows every weekday morning for the first 30 minutes. And we're also live on Discord if there's any trades to be taken after the first 30 minutes. If that's something that interests you, go ahead, subscribe. We'd love to have you in the community. So let's see what's new with SPY here. But before we get into the technical analysis, I do want to show you guys a nice little chart here. And what it shows is the S&P 500 and seasonally ranging a time frame of 20 years. It shows the historical data of essentially SPY's performance given each month of the year. And we can see if you look at January, the last half typically tends to be more on the, at least the downside. It favors the downside. So can we anticipate a correction coming? Well, seasonality is only one factor. At the end of the day, we got to use technical analysis to see what the price action suggests at this current moment of time. So it's a nice little index to use if you guys do want to use it. Again, send me a message in the Discord. We can send this over to you. It's a nice little tool to help you stay on top of, uh, having an extra tool is probably not always, it's never a bad idea. But historically, the seasonality does suggest downside. Let's see how that translates into the charts. So starting with the weekly time frame, you can see here, if we just go into the candle, just the candle that we see the past week, what does this candle look like? So we got our very first pullback. So if you see, of course, the 9 straight candles of green. You saw the bodies get smaller. Finally, we get that first pullback coming back below the low of the previous candle. So that's our first technical pullback. Now, this week, what we saw was a large green barred bodied candle with a higher low relative to the previous candle and a higher high. So the bulls go 2 for 2 there actually, and it shows that price action is quite strong from the buyer's perspective. If I zoom out a little bit more, you can see that we actually had a little bit of a resistance and a nice little pivot point here at about 465. And if you look here, that pullback just so happens to come back, touch that 465 pivot, and we got the bounce this week. So it looks good from the buyer's perspective, just based off the weekly analysis so far. Could we see downside? Well, absolutely. But the weekly chart, just from this candle alone, just from some of the key points of where it pulled back to, potentially creating that higher low pullback, it looks good from the buyer's side. So I really do like that from the weekly chart. That's what stood out to me. Let's go ahead and look at the daily chart. So that will be our next level of defense there to see what's really going on with SPY here. And we can see, really, I mean, if I take my tool, it's a nice little rectangle tool. We come up just like that. You can see here, we've been stuck in this range. So ever since we came back up in mid-December, we've been ranging. We've been going up, down, up, down. We actually tried to hold just above this range to push higher. They failed. Buyers failed. Typically, when you have a failed range breakout like this, what we see is essentially, sellers will step in, but they will target the bottom of this range. So when sellers see a failed breakout, they'll pounce on that failure, assuming that anyone who bought here is now underwater. Especially as we get down here, they likely start getting liquidated, and we saw a gap down back to the bottom of the range. Now, at the same time, sellers could not push this any lower. So sellers, in fact, with this wick lower, it was another failure. So it's also a failure in this direction as well. So when we see, um, you know, two failures on, one failure here, one failure here, that's called a failed failure. And typically that produces a very strong signal in the upward direction. Especially, well, if the second failure is, a failure from the seller's perspective, then the buyers have a strong buy setup. Again, is it something that's conclusive? Absolutely not. But it's something to think about. It's this range has been an area where we've been in here for a while now, almost a month. So if you really want to prove a direction, you have to be outside this range. If you keep coming back in this range, it's really just going to be the type of week where we're ranging, there's not much defined direction until you can finally get out of this range and start showing some sustainable directional movement. So if I look at the what's happened basically this last couple days, you can see right here, what we see is, we see these two candles and clearly it looks like they're holding just above the range, which is good. It's good for the buyers. But what's a little bit concerning is they're not necessarily bullish candles. So we can't say that buyers are here, right? Sure, some people could say, well, hey, that's a large lower wick. Buyers bought that up. But really, it's still closed in favor of the sellers. And particularly even on this candle as well, the body is red, and there's still no evidence that the buyers are there. If the buyers are here, we should see some candles like this, right? At least a green body to suggest that buyers sustained whatever momentum they had. But these are not definitive, conclusive evidence pieces that buyers are here. So you do need to remain cautious of that because the candles are not suggesting just yet, although we're holding above this range, buyers did not go 2 for 2 because these candles ultimately are not bullish. If anything, they're more uh, representative of indecision as opposed to buying, but they're slightly sell biased. This one, sure, you can argue it's more of an indecision candle, but nonetheless, there is still no conclusive evidence that buyers are still holding here. Although, again, on the flip side, you are holding above this range. So at this point in time, looks good for the buyers. But you have to, keep pushing higher. I would say if you want to really push higher, you probably have to push above this 478 level. Definitely. It's a big supply zone. So with that being said, I think it's pretty much the same on the 4-hour chart. You can see here. So as I said, there's a failed failure setup that's really interesting on this. Let me just get the path here. So here's the first failure, right? So buyers failed to hold above that range, right? So they just weren't able to hold it. And then sellers saw that as a failed breakout, and whenever that happens, they target back to the bottom of that range. So right here, right? Uh, so the target was hit here. Then they tried to push it back below this range. And you can see they actually failed. Buyers came back in, stormed in, again, used the bottom of the range as support, pushed it back, now back to the top of the range. Buyers, again, sellers trying to step in here, but buyers ultimately, trying to sustain above that range so that they can push higher. So there's been a lot of failures, right, on this move. We have a failure, right here, and you have a failure right there, right? So two failures here. And what that suggests is a failed failure setup. And a failed failure setup is basically when the first failure, you know, sellers have the upper hand, but they aren't able to push it lower. Buyers then step in, and so you have a failure here and a failure there. Typically presents a strong buy setup in this case. Does that suggest that we're going to go higher? Again, it's still unclear for me just because of all the selling pressure we constantly start seeing at this level. For me personally, I would like to see us clear 478 because if you look now, get a little more granular on the 15-minute chart. We can do that right now because this is where I construct my supply and demand zones. And as I said before, was a strong level of interest on our daily chart from back a while ago. If you guys look at this, like that's a pretty darn strong supply zone. So I would like ultimately, if you're gonna start popping back above or shooting for some all-time highs, you have to start producing some higher lows up in this range. It's absolutely necessary for us to keep going higher. There's no way that we can definitively say buyers are here until we clear this zone. It's just there's too much selling pressure here. Look at the big drop here. Look at the big drop there. Look at the most recent big drop on Friday. There's so many sellers sitting here that if you really want to push this higher, you're gonna have to at least see a higher low in this range. I would say something like this. Otherwise, what happens is, particularly you come back into that range, what's gonna happen is you could get something like, another failure, possibly. You can come back lower. So if you color that red, I'll show you how I got that. So right using that pivot low, um, move that here. So you can see the market made a nice little support intraday. If you start coming back into this range, ultimately it does look more on the bearish side. It does look like a correction is coming. If you look at just the nature and the structure of this sort of move, people could also use trend lines. There's a lot of confluence there. We break a trend line, you break a support. We're looking lower below 475. I would stay neutral above 475. So between 475 to 478, I'd still remain neutral. But ultimately, you need to produce a higher low up in this zone if you want to see upside. And that's just if you're going to be shooting the shot higher. If you think that we're going to keep going higher, you need to see this zone. The sellers need to start, walking away here. Right now, that's not the case. Right now, we're seeing just from this right here, sellers are still here. So you got to clear that for buyers to have the edge. For sellers, you want to have the edge. You want to stay below 475. Looks pretty nice here. A lot of confluence with that support level. You can see the touches here. So 475 is a strong level. Below that, I could see some downside. And then it's also nice confluence with this trend line here, breaking just below that as well. So those are scenarios going in. I definitely suggest to be a little more cautious, just given that January is known to be the month of producing corrections. The technical analysis is still there. On the weekly chart, remember, it's still bullish. There's that failed failure setup. It's still bullish. But ultimately, for that to follow through, you need to have some sort of higher low in 478. Excuse me, there's no questions asked. But if bears want to step in and fail that failure once again, you have to start moving back below 475, and then we can maintain a neutral bias between 475 and 478. So I hope you guys found that video informative. Again, if you are interested in watching me trade live for the first 30 minutes, showing you how I read price action in real time. If that's something that interests you as a beginner trader, feel free to subscribe to our channel. It's at no cost to you. It's just me going through the charts live for you to show you what it's like to trade like a professional day trader. Be sure to follow all our other pages as well, as we do produce helpful content on there as well. With that being said, guys, we will see you tomorrow. If you do subscribe, we can't wait to see you there. Enjoy the rest of this long weekend, and we can't wait to get back at it. Cheers.